Becoming a homeowner is one of the largest purchases that some people make. So financing myths is something I really want to address so it doesn't seem as scary. I'm Katie, the real estate gal in Denver Metro and Front Range. I'm a licensed real estate agent in this state. I help with buying, selling, and everything in between. And I'm sitting here with Kim Correa with Draper and Kramer, and she's going to be helping me address some of these top financing myths that we hear all the time. Thank you so much for joining me, Kim.
You bet. So again, Kim Correa, Draper and Kramer Mortgage. Been in the business for almost 20 years. So definitely hear these myths, talk about them all day long with buyers. And I'm here to help you understand the myths and feel better about the buying process and what you're getting into.
Number one myth I hear almost every day, you have to put 20% down, and it makes me crazy because it's not true.
That's correct.
Yeah.
On a conventional loan, if you're a first-time home buyer, you can put as little as 3% down. If not, 5% down is the minimum. So definitely don't have to put 20% down.
One of the reasons I chose Kim to interview and talk about these myths with is because she helped me purchase my first home. I had enough to put 15% as my down payment, and she ran numbers, and it actually made more sense to put down 12.5%.
Absolutely. So as part of my job, and what I like to do is go through your financial situation and figure out what makes the most sense. A lot of times, a different down payment amount might make more sense than what you're initially thinking. Just like we said, you don't have to have 20% down. Well, maybe 10%, maybe 12, maybe 15. We have to run the numbers and figure out what works for you.
And that's what I really liked about Kim as well, is that she ran numbers and it made more sense to put 12.5% down. I kept that difference in my pocket so I could do home renovations or whatever else I wanted to do with those funds. The next financing myth is that mortgage insurance is expensive.
Right, that is a myth. So to your point about your purchase, you had mortgage insurance, but what a lot of people don't realize is that when you have mortgage insurance, investors give you better interest rate pricing. So I know that is completely counterintuitive, but investors love the fact that you have an insurance policy on that loan because that protects them from default. So when you have mortgage insurance, you probably will get a little bit better interest rate pricing. And mortgage insurance, if you have good credit scores, is not terribly expensive. So as in your case, you kept some cash in pocket, you had a little mortgage insurance, but at the end of the day, you got to do your home remodeling. You basically financed your home remodeling way cheaper than it would have been otherwise.
I'm really glad that we were able to run the numbers to find out a solution for me in my situation, which is how all mortgages really work. It's catered to each individual person. It's not a blanket solution for everyone.
That's right. It's definitely not a one-size-fits-all situation. We have to take the time to go through and figure out what your financial goals are to make sure that we're putting you in the best possible loan.
Wonderful. So the last myth that we have is that you have to pay off all of your current debt in order to qualify for a loan. Not true.
Correct. I hear it all the time. Hey, don't pull my credit yet. I want to pay off all my credit cards first. I would say don't do that. I have the ability to run a soft pull on credit, which is great because I can get a snapshot of how your numbers look and start your pre-qualification process without dinging your credit scores, and maybe you don't have to pay off debt to qualify. If you would like to and that makes financial sense for you, great. But sometimes it makes more sense to keep your cash in pocket versus paying off all of your debt first. So I always recommend, let's take a look at the numbers first before spending all of the money to pay off your debt.
You just mentioned soft pull, so that kind of leads into what would be a good time frame.
What I like to say is it's never too early to start the conversation. I don't care if you're not looking until next summer. I would still love to get the conversation started just to make sure that we're on the right path. Sometimes when I do a soft pull on credit, we find out maybe there's a medical collection that's been posted to your credit you don't even know about. So let's get that cleaned up. Let's start talking about the numbers and figuring out what the right solution is and get you on a good path well in advance.
I love your structure and just how organized, and we're in this for the long game. It's not a quick, immediate transaction. I'm Katie, the real estate gal in Denver Metro and Front Range. If you have any real estate questions, please reach out to me. If you have any lending questions, please reach out to Kim. Our contact information is below. We would absolutely love to hear from you. If you found this video helpful, please hit the like button or subscribe because I do release videos every single week. Thank you so much for watching. We'll see you next week.